So in this video, we are going to be talking about trend reversals versus trend retracements. I often get asked, Shaquan, does price move different on every time frame, and aren't retracements and reversals the same thing? My answer is no. Y'all, we need to talk. So I've been trading for going on 5 years, and what I've learned is that trend is a tricky thing, right? Like it's a tricky part because you get told that price does things differently on every time frame, and you get told that retracements are reversals and reversals are retracements, and then they're not, and then they are, and then they're not. And it's like, okay, well, which one is it, right? And so I found that after teaching for 2 years that this is where a lot of traders get stuck at, because you can enter a trade on a specific time frame and it can look like price is still going down, but then it ends up going up, and then you're stuck wondering, why the heck did you just go up? Or you can enter a trade to the downside, or you can enter a trade to the upside and then it goes down, and then you're like, why the heck did you just go down? And what I've learned is it's because that sometimes you're not going up high enough to see what price is really doing. So I'll give you guys a really good example. Let's say you're on the 4-hour time frame and you see that price is going down, right? And you keep selling off. But then, as price is selling off, it starts to go back up. And you're thinking, oh my gosh, price is an uptrend, I'm going to keep buying. And you start the buying phase, but then eventually at a certain point in the market, you keep buying, but then you get stopped out because price is dropping. And you're like, wait a minute, I thought now we were reversing. Why did price go down? And so I'm going to show you guys that you have to stay ahead of the game. By staying ahead of the game, you have to stay looking at 1 to 2 higher time frames to really know what price is doing, right? Because once again, price does nothing different on every time frame. Price moves in cycles. So in last week's video, the first video of this trend series, I talked about uptrends and downtrends, and this is a part of our cycle. So your cycles are made up of 3 waves: trend, retracements, reversals, right? So yesterday I talked about trend and what makes up trend. Remember, a trend is an uptrend and downtrend, but what cycles make up the trend? It's reversals and retracements, right? And so that's what we're going to be getting into today. So let's go. And if you don't know, my name is Shaquan and I'm the trading educator here at SLFX Trading. And this month, for the month of October, in the Swing Trading Society, my private coaching group, we are working on trend, establishing it on our higher time frames, looking at it on the lower time frames, grouping at least 2 or 3 of them together. And then I'm actually showing the Swing Trading Society how they can properly read the trend so they can trade on the right side of the market. And if this is something that you're looking for and you need that personalized help, that personal guidance from moi, go ahead and click the link in the description below to make sure you're signed up to the Swing Trading Society so you don't miss a masterclass with me every single week this month of October. So let's get back into the video now. So now we're going to go to our price charts. All right, you guys. So now we're back on our price charts. And so now we're going to get into the trend for right now, right? Remember from last week's video, and if you missed last week's video, I will place a card up above and the link down below so you can go back and watch that video. That way all of this connects together for you. So right now we have this downtrend, right? And the downtrend right now is made up of a high, lows, high, lows, high, lows, high, lows, right? And this is very important when it comes to trading, because what it's doing is it's showing you who's in control. And last week we talked about that as well. So I won't really do a full recap over that. I'll let you guys go ahead and watch that for yourself. Here we can see that price was going down. And what you're going to notice is what it's doing is it's making a series of lower highs and it's making a series of lower lows. Okay, so every time that price pushes down in this downtrend, what this is called is the trend continuation. And mind you, we are on the daily time frame. Okay, so I'm always going to mention time frames because that's very important. So if you're let's say a day trader or a short-term swing trader or even a scalper, and you do analyze the daily, this is very important because It's showing you who's in control. It's showing you the flow and direction of price. I'm going to zoom in a little bit more so we can see this, okay? So it's showing you who's in control. And what you want to do is have a good handle of who's in control so you can know how you need to trade. Now, what this also means is because we're in trend continuation mode, anytime price pulls back against this trend, that is now called the retracement. This is not the reversal, okay? And I want you guys to think about retracements and reversals like this. Let's say that you're driving down the road and you notice that as you're driving down the road, you forgot something at home, right? So now you got to turn all the way back around to go back home to your original destination, right? So what this could be is this could be a mere retracement because you're heading back to a certain point or a certain direction. You're turning back around. But here's where the reversal comes in at, okay? Because with the retracement, what you're basically saying is as the market is moving up and down, up and down, up and down, up and down, you can go back to your intended area, right? You can go back to your original destination where you come from. But as long as you don't pass that certain point, you're still in a downtrend because let's say you go back from being home. Let's say that you realize that you went back home, right? Let's just say that this is your destination. This is home. I'm actually going to use an ellipse here. So let's say this is home and you don't have to go all the way back inside, right? So you're heading back to that direction. As long as you don't pass your house, you were still in a downtrend because now what you're going to do is you're going to go back to that destination that just made you turn around. And this is where the lower low comes into play in a downtrend. So you had to turn back around. You went back forward. You went back home. That's retracement. And then you end up going back past the location and you even passed it. So now you've made a new low, right? And let's say that you keep doing that, but let's say this time instead of going home, it's after work. And so now you decide to go to the store. And the store is conveniently located between your job and your home. So now what's going on is instead of you going back to your house, you're going back to the store. And let's say now instead of you going back to the store, now you're going to go to a friend's house and this friend lives past your job. So now you're going to go past your job, which is this point here at the lower low, and you're going to keep going lower. Okay, you're going to keep going in that direction. So as you notice, what I'm basically saying is when price is trending, it's meant sometimes to, yes, visit the previous point where it just was, or it's meant to not visit the previous price where it just was. Overall, it's not going to pass the previous high. Okay, so that's why this is very important and it's going to look different all the time. Okay, so I would say like this: when dealing with a pound pair, you have to be careful with the trend because it has a lot of false breakouts. Trust me, I know from experience. Okay, so you just got to be careful. So here in this example, I'm going to zoom in just a little bit and we're just going to deal with some of the recent areas here. So as you can see, this is the retracement. Okay, so price pushes up against trend and then it pushes back down here. So this will be the trend continuation once again. And this is why it's called a cycle, because as you notice what price is doing here is trending down, is retracing up, is trending down, is retracing up. And what do you notice as it's trending down and as it's retracing? It's the same thing that I just said as far as the points that is visiting. It's not passing the previous area in which price was moving. It's continuing down. It's passing certain areas in the market. So this is the difference between a retracement and a reversal. A retracement is meant for you, or it's meant for price to pull back against the natural direction. So if I was on this lower time frame, and we're going to erase some candles here. So here what you'll notice is when price was in trend continuation mode, that means it's pushing down. You can see that price is fluctuating down here. Down, 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 down. We have a pause. Down, down, down. And then we get this green candle right here. Now, what some traders will do is they'll say, oh my gosh, price is getting ready to reverse. Because remember, when you're on that lower time frame, you may think that price is doing something different. But if I see a green candle like this, I don't think it's the right time to buy. Not against the trend just yet. I kind of think it's the right time to stay out of the market unless you're a scalper or a quick day trader. But even then, still, you'll have to have a precise area where you want to take your trade back up to. And this is where some people use support and resistance or some type of key levels or whatever the case may be. For me personally, I just use a simple zone. I'm just going to stay looking at where price is going from here and then understanding the flow of where it wants to stop at. So as you guys can see, it pushes up, gives a beautiful rejection candle. The next day is bullish as well. And this is where some traders on that lower time frame will keep thinking that it's time to keep buying. But then over here, we get a nice bearish engulfing candle. And to me, that is the time where you want to start selling again. And you want to start selling back down to those previous lows or even lower. And the question is why? Because this is just now a mere retracement. It's going against the trend. And this is also called the counter trend trade. And so what happens next? What happens next is price comes and it goes down. And if you look at these two lows here, this low is lower than this low. So now it's established that price wants to keep going in the downtrend. So now this is the trend continuation yet again. And then we get a very beautiful spinning bottom. And then we get a very beautiful, nice volume candle right here, bullish volume candle. This is not the time, once again, to want to become the buyer. This is not a reversal. This is a retracement. Why? Because in order for this to be a reversal, price needs to pass this high here. And as you see, it did not. It formed a very beautiful hammer candle, bearish hammer. This is a time where you want to sell again. So now this area here becomes the retracement. And this area here becomes the trend continuation. Now this works the same when price is going in an opposite direction, such as the uptrend. But now that's the reversal, okay? So I'm going to play this for a bit. Now the reversal is different. Here's what the reversal looked like. As you guys can see, we got a lower high here. And let's talk about this lower high here. I'm just going to use an ellipse. When it comes to this lower high, what do you notice happened here, here, and here within the pullbacks? What you notice happened is that price pushed back into this area, but it did not pass this number. Price pushed back here too, but it didn't push up into any type of particular structure that most traders would use and deem as a tradable area, right? Not unless you went all the way to the left. I don't have time to do all of that, or I don't really want to do all of that. I'd rather just stay with where price is right now because it just makes for better trading reasons. So for example, if you're looking at this as a high point here in the market, well, this is our lower high. And then we get a lower low, which is here. And so once again, since price has made a new low, this low is lower than this low. This lower high is lower than this high. What you'll be looking at is you don't want price to pass this area, especially if you're still thinking that price is going to be going to the downside. Now, as you notice what happens here, this is how the reversal forms. The reversal forms when your last lower high in a downtrend has been violated. And it's opposite when price is in an uptrend, and we'll get to that in just a second. So as you notice here, price comes and it pushes past this last lower high, and it gives you a new high point here in the market. And then it even keeps going up higher. But in order for this to be a true reversal, right, you have your higher high, you're going to need an established higher low, which is what we got here. Higher high, then we have a higher low established here. And in order for this to be an established low, it needs to stay above the previous lower low. Because if price continues and it passes this area, well, guess what? We're still in downtrend form. So these lows and highs do go together, right? So if you notice here, what does the market do? The market pulls back and it starts to trend up. So now we are in trend continuation mode. And now because we're in trend continuation mode, you don't know how high price is going to go. But when she starts to pull back, guess what motion we're in now? This is the retracement or the pullback or the correction. So this is the pullback. And now as long as price stays above this high, then we are still in a uptrend. But the moment she passes her higher high, we will be in trend continuation mode. So you guys, this is literally how it looks. Reversals are quick reversals. Okay, now once again, the lower time frames you go, you're going to see more fluctuations and you're going to see this happen more than not. You're going to see this happen more often. But what's important is you keep a good idea and flow of what price is doing. So for example, if I'm on the daily time frame, but I enter on the 4-hour time frame, and we're going to go back again to see how this can potentially look. So this is the 4-hour time frame. And once again, like I said, you're going to see more fluctuations. So if you are the person who you pay attention to every high and low on the 4-hour time frame, which is a really good idea to do, what it's going to look like to you is this. So say, for example, this area here. As you can see here, the market starts to make higher highs and higher lows here. So you have a higher high, higher low, higher high, higher low, higher high. But then you get a lower low point here in the market. And for you, this is the turning point of a reversal because now you have a new low. And then price pushes up and gives you a lower high. And then now she starts to push down, right? And she's making a series of lows and lower highs and lower lows, lower highs, lower lows, until you get to the point here in the market where she gives you a very beautiful higher high, then a higher low, and then a higher high. This could be to a point in the market where traders will keep looking for a potential buy, and where they're going to look for their potential buy could potentially be somewhere down here because the market keeps going up. And as you see right here, this is your higher low. Price did not pass it. And so you'll get a bullish candle and you'll think, oh my gosh, price needs to go to the upside because we're potentially reversing. And this is the dangers of when you're on a lower time frame, not paying attention to the higher time frame or keeping in mind what the higher time frame is doing. So let me ask you guys a question. Just because price reversed here, it made a higher high, higher low, higher high. Does that mean that we're in an uptrend? Now, some of you may say that, Shaquan, yes, we're in an uptrend on the 4-hour. But remember the daily time frame. What's the daily time frame doing? The daily time frame is in a downtrend. And remember that whatever the daily is doing, the 4-hour must be doing as well. Because the 4-hour is what prints the daily candle. Remember, it takes six 4-hour candles to make one daily candle. Okay. So if that's the case, when price starts moving down on the 4-hour, what do you think price is doing on the daily? It's literally doing the same thing. They are mirroring one another. So no, price is not doing anything different. This is the retracement on the daily time frame, which makes this a retracement, not a reversal on the 4-hour. Because if I go back up to my daily time frame, you would clearly see that this is not a reversal. It's just a mere retracement against the trend. So this is why you have to know the difference between retracements and reversals and what time frames you need in order to establish them. So here's what I'll say. I always teach this in two parts. If you are a lower time frame trader, and let's say you never went up to the daily time frame, then yes, you're well within your rights to say, Shaquan, that's a reversal, because you probably didn't even know that the daily was in a downtrend. However, if you do analyze the daily time frame and you do trade that 4-hour, you have to admit that yes, this is a downtrend. This is a retracement.
And you have to establish that, because if you do not establish the right words and the right lingo and the right terminology as you're trading, what's going to happen is you're going to get caught on the wrong side of the market trying to play both sides of the field. Okay, so this is the difference between retracements and reversals. Reversals on the higher time frame don't happen as often as the lower time frames do. It's going to take some time. But as long as you understand where price is going in that overall field and where price needs to go so you can participate, it will make it easier for you to understand how to trade. Okay, so once again, you guys, that's the difference. And if you like this video, make sure you give it a thumbs up. If this helped you, make sure you comment down below in the comment section, and make sure you're subscribed to the video, share the video, and I will talk to you next Wednesday when we talk about another piece of trending advice where I'm talking about all three market cycles together and if you should trade them all at the same time. So I'll talk to you guys next week. Make sure you join the Swing Trading Society, and I will talk to you on the inside.